Quickly, let's move on and bring on board a corporate voice on the show. We have with us Bodal Chemicals. We want to talk to them about their FY19 growth outlook, the price trends in some of their key products like that of vinyl sulfophylline, and of course even the company's debt reduction plan. So let's introduce Mayur Pandya. He is the CFO of Bodal Chemicals. He joins us now on the show. Mayur, good morning. Thanks so much for joining us on ET. Now, before we talk about your future plans, let's talk about Q4 because it was a soft quarter for you. So for April to June, for the new quarter, how has it been in terms of volumes as well as blended realizations?
When we compare fourth quarter with earlier year's quarter, that gives slight decline. But as far as quantity is concerned, we are better. But realization, we are not that better because in FY17 there was an abnormal gain in one of the product, vinyl sulfone ester. So over there realization was better, and that lead to better realization in dye stuff also. So if we remove that abnormality, then there is a good growth even in fourth quarter.
Thanks so much for joining in. Would just like to understand from you, Mr. Pandya, how is the share of the dye stuff going to increase as part of the overall mix of your over FY19 to 20 post the recent expansion as well of 12,000 tons? Can you also tell us if the traction is seen in dyes and intermediaries from clients?
By completing this 12,000 metric ton expansion, we are expecting that in FY19 we will consume almost 50%, rather our utilization will be 50% of this new facility, and in next year it will reach to optimum capacity, say about 80 to 85%. So it will generate almost 250 crore of revenue at the optimum level. But at the same time, it will have a droppage in dye intermediate revenue because dye intermediates captive consumption will increase. So about 120 crore of droppage will be there in dye intermediate realization.
Okay, what's your domestic export revenue mix, and with growing shift to India from China, how do you see this shape up in 3 to 4 years? Are we seeing any ramp ups as well from foreign and MNC clients?
See, export is almost 30% for us, and because of dye stuff expansion, our export share is definitely going to increase. And as far as China's effect is there, our export will slightly increase because earlier also we were supplying to MNCs at the same time more than 40 countries. So because of China effect, export jump won't be there much, but realization improvement is there, and further growth in dye stuff is there because of dye stuff new capacity ramp up.
Now, last year your margins were weighed down due to the higher overheads on account of major expansion projects. How is the consolidated capacity utilization expected to read, and what is the outlook on your EBITDA margins?
See, we have been generating about 18% margin in last 4-5 years, but we have been guiding to the market that bare minimum EBITDA for us is about 15%. But because of certain expansion, this is dye stuff expansion, cogeneration power plant, further we are going to start up thionyl chloride by next quarter. So all this will add to our margin, and once all this will be operational, our bare minimum EBITDA should be at least about 18%. So in coming say 18 to 20 months, our EBITDA bare minimum should be 18%, and whatever China effect we get, that will be bonus for us.
Okay, now to talk about your future projections, analysts are penciling 9 to 10% growth. What are you aiming based on whatever indicators you're picking up from the industry in general?
See, we are targeting 10 to 15% growth continuously for 2-3 years because of the expansion what we have completed and what we are going to complete within 3 months. And for the future growth, we have already acquired land near the Dahej. Over there, new chemical, specialty chemical complexes will be there, and that will give growth for about 3 to 5 years.